As of 10:50 a.m. Eastern Time, Palantir Technologies, ticker PLTR, is trading live at $193.59. This is a significant intraday drop, down about $13.59, or over 6.5% from its last closing price. Now, that price action is precisely the disconnect we need to talk about, because that 6.5% gap down happening on massive volume is coming just hours after the company reported what was, by almost every metric, a blowout third-quarter earnings report. This is the perfect example of the market's expectation running headfirst into a complex reality. The immediate reaction you are seeing this morning is not about the earnings themselves, which were stunning. The reality is that this stock, after an incredible 2025 run-up, was priced for absolute perfection and perhaps even more. And now the biggest names in finance are starting to place their bets on which side of that valuation divide is correct. Let's first establish the common ground. The expectation, especially for anyone holding the stock yesterday, was pure euphoria. Yesterday, the stock closed at $207.18, hitting a new 52-week high of $207.52 during the session. The bull case felt unassailable. Then, after the bell, Palantir delivered. Q3 revenue soared 63% year-over-year to $1.181 billion, crushing estimates. Earnings per share came in at $0.21, easily beating the $0.17 analysts were looking for. But the real headline was the commercial business, specifically in the United States. U.S. commercial revenue exploded, growing 121% year-over-year. This is the validation everyone was waiting for. It signaled that Palantir's artificial intelligence platform, or AIP, is not just hype, it's being adopted at a blistering pace. The company's adjusted operating margin hit a record 51%, and management raised their full-year guidance substantially. On paper, this is a grand slam. So why is the stock selling off hard today? This is the reality check. The market is not questioning if Palantir's Q3 was good. It is questioning if a 600 PE ratio is justified. Before this drop, Palantir was trading at valuations that are, to put it mildly, astronomical. We're talking over 130 times trailing sales. Analysts, even ones who like the company, are struggling with this. Goldman Sachs, for example, just raised its price target to $188, but they kept a neutral rating on the stock. That new target is still below where the stock is trading even after this morning's drop. D.A. Davidson's analyst praised the quarter's breathtaking results, but also maintained a neutral rating, citing the unprecedented premium in the stock's valuation. The consensus on Wall Street remains a firm hold. The expectation was that a great quarter would send the stock flying. The reality is that the stock was already flying, and the great quarter was simply the justification for the price it had already achieved, leaving no room for a further climb. This brings us to the second, and perhaps more critical piece of reality hitting the stock today: the short sellers. While retail investors on forums across Reddit and X have been championing the stock as the next great AI titan, some of the biggest institutional players are now publicly betting against it. The major news breaking this morning is that Michael Burry, the investor famed from The Big Short, has disclosed a massive new short position against Palantir. This is not a small, quiet bet. This is a significant billion-dollar level options bet that the stock is overdue for a major correction. This is the ultimate expression of the expectation versus reality conflict. The retail bull sees 121% commercial growth. The institutional bear sees a 600 PE ratio in a high interest rate environment. What's your take on Michael Burry's short bet? Is he right about the valuation, or is he underestimating the AI demand? Now, it is critical to understand what this short seller activity is and what it is not. When many investors hear short interest, they immediately think of a potential squeeze. We must look at the data. Palantir is not a typical short squeeze candidate right now. In fact, the data says the opposite. The most recent figures show short interest as a percentage of the float is actually quite low, at only around 0.226%. This is less than half the average for its peer group. The days to cover, or the time it would take for all shorts to buy back their shares, is incredibly low, at just over 1 day. This signals that until now, there hasn't been a coordinated, large-scale bet against the company. But the most important metric for investors to track right now is the borrow fee rate. This is the interest rate short sellers must pay to borrow shares. For Palantir, that rate is extremely low, hovering around 0.25% to 0.45%. This is critical. A low borrow rate means it is very cheap and very easy for large institutions like Burry's fund to acquire a massive number of shares to short. This is not a crowded trade. This is a new, fundamental bet being placed by big money players who believe the valuation is detached from reality, regardless of how good the company's performance is. They are not betting that Palantir will fail, they are betting that its stock is simply too expensive. For any investor, you can find this data on sites like Fintel or directly from NASDAQ exchange data. A spike in this borrow rate would tell you that shares are becoming scarce, but for now, the door is wide open for bears. This sets up the true battleground for Palantir. On one side, you have the fundamentals of the company itself, which are undeniably strong. Palantir operates two main platforms: Gotham, its legacy system used by government agencies for defense and intelligence, and Foundry, its commercial platform. The catalyst driving this entire story is its new artificial intelligence platform, or AIP. AIP is the product that allows companies to take powerful large language models and securely run them on their own private siloed data. This is what every major corporation is trying to figure out, and Palantir's 121% U.S. commercial growth and addition of 62 new customers in the quarter prove they have a winning product. They are solving the problem. On the other hand, you have the financial reality of the stock. Its valuation is baking in not just this quarter's explosive growth, but perfection for years to come. The sell the news reaction today, combined with Burry's massive short, is the market's way of saying, "Show me more." The company proved its exceptionalism, but the stock's price already reflected that. The future outlook is now entirely dependent on one thing. Can they do it again and again? The bull case requires Palantir to not just maintain this 121% commercial growth, but to accelerate it quarter after quarter to grow into its valuation. The bear case, led by Burry, is that any slowdown, any hint that this growth is decelerating will cause the valuation to collapse. What investors need to watch next is clear. Forget the Reddit hype and focus on the institutional flow. Watch the 13F filings in the coming weeks to see if other major funds are joining Burry's short or if they are buying this dip. Monitor the option chain for signs of unusually large put or call buying, and most importantly, listen to every word from management about the pipeline for AIP. Is the growth accelerating further, or is 121% the peak? This is a fascinating moment for the company, where its operational success is in a direct fight with its financial valuation. Comment below with your position. Are you buying this dip today, or are you taking profits after that massive run-up? In the end, the story of Palantir has become the poster child for the 2025 AI market. The expectation, fueled by a 52-week high and euphoric retail sentiment, was that a blowout quarter would send the stock into the stratosphere. The reality, delivered this morning, is that the market is a forward-looking machine. The blowout quarter was already priced in, And the new reality is a stock with a 600 PE ratio, a neutral rating from key analysts, and one of the world's most famous bears initiating a massive short position. Palantir, the company, is winning. The question now is whether Palantir, the stock, can do the same.